This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. And you know what? That is often the best kind of opportunity. An opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by United Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hi, everyone. Before we get on with our podcast this week, I wanted to take a moment to tell you about a recent development. We have recently completed development of a mobile app. We call it our Mobile Investing Companion app. Its name is called the Best Stocks to Buy Plus. We put quite a bit of thought into this app. I wanted it to be something that would truly bring you value. This is not a mobile app that just presents you pictures of stock charts with a long list of numbers. This app will in one place present to you timely information to make you a better investor. The app uploads our latest podcast episode for easy listening, has investing lessons, market news, expert interviews, videos, additional stock ideas, along with the ability for you to easily text me any questions you may have. The app is free with plenty of features and also has a premium option that unlocks even more value. Think about this. You can have access to free, valuable information in your hip pocket. Yet, you have a burning question? With our monthly premium subscription, you can reach out to me directly and receive attractive stock tips driven by an algorithm based on the conditions of now. This is a one-of-a-kind investing app that we developed ourselves, not available anywhere else. We're excited because we've received feedback that it's a great app. It would mean a lot to me if you checked it out for yourself. Download it today, share it with others. Just go to our website for the download link on your mobile device at www.connermg.com. That's CONNERMG.com. We're only offering the Android version for now. We expect to release the iOS version soon. Hi, everyone. This is Mathis Connor with Connor Management Group, and this is the Best Stocks to Buy podcast. Today is Sunday, June 3rd, 2018, and this week we're going to look at the best growth stock to buy right now. On to our opening slide. It's called the setup and the approach. Now, the objective of this podcast is to present to you a high probability upside potential stock. The key tool we use is a financial model, a proprietary tool we developed that uses multiple valuation approaches across over 6,000 stocks every week. So the view you're getting is not driven by some sensational headline and some publication focused on increasing readership, but simply on the investment opportunity. An easy way of thinking about our approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, when I truly view creating such a model as daunting, but I believe I was well prepared for the challenge. I have plenty of computer programming experience as an engineer and over $15 billion of transaction experience as a finance and development guy to judge the research we reviewed. So my approach didn't come to us overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, and then added some of my own tested intuition to implement new data sets that weren't even available as little as 10 years ago. Furthermore, my model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections that they share with the public. Now, a point worth remembering is that these are views based on today, an unforeseen regional economic report, regional conflict, or revised policy can change these expectations tomorrow. A benefit of using a professional money manager like Connor Management Group is having someone experienced in making educated assessments about the uncontrollable, as well as having someone to readily share their opinion about whether a particular event is a reason for concern. And now, so what did our model find for you this week? Well, it turns out that the best growth stock to buy right now we found to be in the biotechnology industry. On to the next slide, titled Industry Overview. The biotechnology industry is comprised of international companies providing therapies for a wide range of human ailments and medical needs. Now, just to level set, here's a list of the 10 largest competitors by market cap. I'm sure a number of these names will sound familiar to you. Johnson & Johnson, Pfizer, AbbVie, Merck & Company, Bristol Myers Squibb, Abbott Laboratories, Eli Lilly and Company, Celgene Corporation, Allergan, and Shire. Now, the growth drivers in this industry are the following. There's the need to meet unmet medical solutions, obviously, the desire to expand medical treatment of individuals worldwide, the desire to minimize delays related to regulatory hurdles, and recent reduction on corporate tax rates. Some of the industry challenges: successful expansion of product pipelines, increased generic drug competition, and pressures to lower drug pricing. So you can see the positives and the negatives. On to the next slide. It turns out that the best growth stock to buy right now is a company called United Therapeutics. The ticker symbol is UTHR, and we see this 6-month upside potential at potentially greater than 50%. On to the quick facts slide. United Therapeutics is engaged in the development and commercialization of therapies for cardiovascular disorders, cancer, and infectious diseases. The firm's most successful products focus on the treatment of pulmonary arterial hypertension, that's PAH. Now, PAH is a medical condition affecting the heart and the lungs. Now, the company's website is let me just spell it out, www.unither. That's unither.com. That's short for United Therapeutics. The company is headquartered in Silver Spring, Maryland. They were founded in 1996. They have 800 employees. On to the metrics slide. Over the last 12 months, the company had $1.7 billion in revenue. Over the last 12 months, the company made $428 million in net income. And also over the last 12 months, the cash from operations for United Therapeutics was $474 million. On to the operating margins. This company makes very good operating margins. In 2017, they were 81.2%, and in 2018, they're projected to be 53.0%. Still very, very healthy. On to the valuation metrics. The trailing PE ratio is at 12, and the forward PE ratio is at 11. So that's a good relationship to see when the forward PE ratio is lower than the trailing PE ratio. And also, an observation is that those are pretty low PE ratios for companies with such high operating margins. The PEG ratio is at 3.5. The price to sales ratio is at 2.7. And the price to book ratio is 2.2. And the enterprise value to EBITDA ratio stands at 4.0. The company does not pay a dividend. On to the next slide is a price chart of United Therapeutics. Stock over the past year has ranged from a low of about where it is right now, around $108, to a high of nearly $170 about 9 months ago. Basically back around February of last year, February of 2017, the stock in the industry in general experienced a pullback due to some increasing competition, and there's also some pullback over concerns about drug pricing and increasing competition from generic drugs. On to the next slide. It's called Looking Back and Looking Forward. Looking backward, in the past year, United Therapeutics has experienced some increasing competition. Gross margin was down a bit from a year ago. The company initiated some cost containment programs, which is a good thing. And additionally, the company saw demand increasing for its PAH drugs. Also a good thing. Looking forward, the company is diversifying its products for the solid pipeline. The company has increased its research activity with the hope of future commercial successes. And the future drug line is focusing on oncology and other cardiopulmonary diseases. The why now, the bull rationale. We think that this company is a great buy right now because of an expectation of increasing sales per share. Right now, the valuation metrics are low, and as we mentioned earlier, we expect the valuation metrics to be even lower in the future. And additionally, the company is expected to reduce its debt over the next year, which frees up cash flow and helps drive up the share price as well. On to the summary slide. The financial statement quality of United Therapeutics is excellent. They have a very strong balance sheet. The operating margin trend is good. The price pattern trend is negative, although we are very optimistic. The industry outlook in general we still consider to be positive, as well as the overall market outlook appears to be positive. Now, the recent closing price was $108.23, and we see a 6-month price target possibly as high as $187, which gives the company a 6-month upside potential of greater than 50%. So it's for all these reasons that we believe that United Therapeutics is the best growth stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Bye.
Hello everyone, this broadcast was made by Connor Management Group. We are a registered investment advisor and money manager for individuals, businesses, and family offices. We are not your typical financial advisor in that we invest our clients' funds directly into individual stock positions. We do not put our clients into other stock mutual funds. At Connor Management Group, we help you grow and protect your assets. We craft high growth investment portfolios for your children and other minors. We manage the rolled over assets from 401k accounts. We manage IRA and trust accounts. So how do we go about serving our clients? One big differentiator is that we develop some pretty comprehensive computer software that reviews, analyzes, and ranks over 6,000 stocks on a weekly basis. And from that, we create concentrated investment portfolios of well-researched and closely watched stocks. Furthermore, we operate under a managed account arrangement. And that means you open and fund a brokerage account in your name, and we simply manage your investments electronically. That gives you, our client, the greatest control and transparency possible. You can learn more about our service at www.connormg, that's CONNERMG.com. Additionally, we've set up a group on the LinkedIn platform. The name of our group is simply called Stock Investing Tips, Better Returns, Bigger Pockets. Now, this is a private group, which means you have to click the Ask to Join link. We do this because we want to be able to control the quality of the member experience. So if you like what you heard and you would like to receive more timely investment information and be able to post questions, just send me a message to Ask to Join our LinkedIn group. You can readily find my profile on LinkedIn. It's Mathis Connor. That's MATHISCONNER. And if you have any problems connecting, just send me an email at mathis@connormg.com. Well, that's all for now, and I'll talk to you in our next broadcast, or hopefully with you in our LinkedIn group. All right, everyone, have a great week.